Welcome to the Global Pulse, a short video series where our experts break down a trending topic in international business and why it matters to you.
Today I'd like to address the recent events in the Suez Canal, the impacts on international business and global supply chains, and 3 actions to consider. On March 23rd, a 220,000-ton cargo vessel carrying approximately 18,000 shipping containers ran aground while traveling through the Suez Canal. This massive quarter-mile-long ship blocked passage to a critical shipping lane, one that accounts for about 10 to 12% of the world's seaborne trade. The Suez Canal is considered a single point of failure to the maritime industry. It's one of a half a dozen choke points whereby a single event can disrupt flows of the entire ocean transportation network. Now, the repercussions will extend far beyond the time it takes to free the ship and resume maritime travel. This is a global trade event that's occurring at a time when supply chains are severely strained or fragile. We're seeing logistics companies experiencing unprecedented growth in the neighborhood of 200 to 300% increase in demand. And this is prior to the event. So in a couple days, what took a couple days notice to book a shipment now is taking 30 to 45 days. Inventory levels are rapidly dropping and the maritime industry is experiencing massive port congestion. There's also a severe lack of shipping containers. In some cases, it's been reported that the demand is 5 times greater. And if we start sending the ships around the South Africa, you're removing potentially about 6% of the global container capacity from the market, according to Bloomberg. Limited warehouse space, strained trucking networks, and of course, the pandemic, which is still underway, are all other factors that could amplify the effects of this disruption. But going forward, this incident is going to further reveal the intensity of competition for resources, as well as nonlinear effects of a single incident on a tightly linked and dependent supply chain ecosystem. Future disruptions, especially to critical manufacturing, sourcing, or transportation single points of failure, will reverberate at an intensity and speed that could easily displace your business advantage in months or even days. So what can you do about it? Well, first, you have to ask yourself whether or not you have the intelligence, the insight, and agreement on the products that matter most to you and your customers. In other words, what drives profitability and what do the customers expect? Begin there. Highlight those product lines, product families, and now determine what kind of detailed information you need about who and what you depend on through the life cycle of your supply chain. Focus on inventory and capacity placement and, of course, lead and replacement times under normal and extreme conditions. Where is the inventory located? Is it diversified? What's the cost of diversification? Same thing is true with capacity, whether you're producing it or someone else is producing it. Unfortunately, many organizations stop at the distributor or the broker. Leading companies do not consider that or establish that as a demarcation point. They don't assume it's someone else's issue to manage. They manage the cost of it. They also have to manage the risk of it. So it's your organization's supply chain, including the cost and risk of managing it. Diversifying the high concentration of assets or capabilities or designing alternative paths cannot be effective really without understanding the business priority and the resources that are needed to deliver the value. Now, just one footnote here. Many companies do this. They analyze the risk in a supply chain, they get all this data, and then they just let it die. Good organizations capture, maintain, retain, and leverage it. They enlist help from the outside to help cut across organizational boundaries to get the data. They'll also enlist or acquire software as a service to monitor the environment and get external data that gives them insight into those supply chain networks and who they're competing with. The real-time data should augment the continuity, emergency, and crisis management plans, as well as the playbooks. The second recommendation is to overlay your footprint and conduct scenarios, war games, what if analysis, and single point of failure analysis. The companies that emerge as winners from major events such as these, they don't look at their supply chains in isolation. They enlist critical dependencies, both public and private resources, the ones that we identified above when we were mapping our supply chain, to unveil those weaknesses and to address and to take action on it. The third recommendation is that all this is going to require an investment, and good organizations understand that's an investment and understand there are times when that risk and performance trade-off needs to be adjusted, which means you need to measure the return on risk as well. Holding more inventory cuts into margins, but no inventory cuts into profitability and worse, disappointed customers. Landed costs, the cost to move goods, and lead times are rapidly increasing. Beware, the ripples have just begun.